Joining us for a closer look at what's playing itself out in that market scene is Annatjie Van Rooyen from My Wealth Investments. Annatjie, always a pleasure. Good afternoon.
Hi, Annatjie. Thank you for having me.
Thank you for being with us, Annatjie. Maybe we can start off by just reflecting on overall sentiments. We are seeing more red screens than I think we would like to see. But of course, we've seen this big GNU rally. I'm wondering if we are leading towards some sort of a correction now and some sort of a normalization.
I think the sentiment still remains positive, and we're probably just seeing a bit of profit taking. I think a lot of short-term traders made very handsome profits in this market. So I think this market's just letting off steam. We probably became a little bit overbought in the very, very short term. But as you have previously also mentioned, investors now await the appointment of the cabinet, and also investors would like to see some evidence of an acceleration in growth enhancing economic reforms and fiscal discipline. So even though our CPI numbers came out yesterday and we're still quite sticky, there are definitely mitigating factors at play here. The rand has appreciated quite significantly, and that bodes very well for our economy going forward. Oil prices softer, and also we are looking at a moderation in inflation on a globally. So I think sentiment's still very positive. There's just a pullback.
You did mention the issue of inflation. Let's maybe touch on the Bank of England and what we're expecting to happen there. We are seeing CPI really doing well there, considering what we've just gone through over the last 18 months rather.
Yes. A huge improvement. They've actually reached their target of 2%. But unfortunately, the services inflation and wage growth are still too high and way above the desired levels of the monetary policy makers. So also the core rate is at 3.5%, which is well above the target, and they're expecting to see some fluctuations moving forward. But who knows? I think that the elections are currently overshadowing everything, and we'll have to wait and see what they do. If they don't cut rates, maybe they miss a great opportunity. If they do, it'll be a nice surprise for the markets, but we'll have to see. I think politics are dominating right now.
It is the kind of year we are having the kind of year we thought we'd have with politics at the helm. But I'd like to go into some company news now, maybe starting off with the historical issue here. Sasol and Transnet, I saw that contract was actually from 1991. That's the year I was born. Yeah. So that tells me that this has been going on for a while. Please talk to us about that one, Annatjie.
Yeah, that's some good news for Sasol. That Sasol share price has been sold down so aggressively. So Sasol received that news very well. It's like 6 billion rand that'll enhance that balance sheet. I think they can do with that 6 billion rand. So that's very good news for Sasol. And Sasol is busy making a very good recovery right now. And I still think Sasol offers very good value at a forward PE of not even 3 times and a very attractive dividend yield. So this just adds to the good news and the investment case for Sasol.
Wonderful. Standard Bank also coming out. They actually come off record numbers here. So I'm wondering if a small marginal increase in their performance is something that might concern markets at all.
No, I don't think so. They've been guiding investors as well within the guided range, and they still remain committed to reach that or achieve the 17 to 20% return on equity. So, all the South African banks, the big four, they're only back at the pre-COVID levels right now. If you look at price to book ratios and forward price earnings ratios and dividend yields, South African banks still offer very, very good value for investors.
Then we must talk on bonds here. I'm told that the demand for SA bonds has really shot up. And let's talk about that. I think it's all part of that wonderful SA Inc. story that's playing itself out right now.
Yes, definitely part of the SA Inc. story, and that risk premium that we've had built into the bond markets definitely unwinding right now after the positive outcome of the elections. So with those yields, close to it's 10% on the shorter dated, the longer dated ones. You're looking at about 12 and 12 plus. To lock in those yields, that's a very wise prudent investment even. Nothing wrong with that. So the bond market's very attractive. And I think South Africa is back on the map and back on the radar screens of the foreign investors. And you definitely see it in the bond market and in the equity market and in the currency market.
And also just continue with the theme of inflation and abroad here. We are seeing the Swiss National Bank, they've decided to cut rates. ECB also cutting rates here. What it does tell us here, Annatjie, is that there's a bit of an uneven picture playing itself out around the world. We kind of saw interest rates and inflation increasing altogether, but it looks like as we talk about interest rate cuts, that may not be such, a positively correlated picture. I'm wondering if that will do anything to the global outlook for inflation.
That's a very good question. There are risk factors at play at the moment with the elections coming up in the next 10 days in France. We don't know how that is going to play out, and that will definitely have an effect on the euro-dollar exchange rate. So, even though inflation is currently moderating and we are betting on interest rates to come down further, or to start coming down in the US and even in South Africa towards the third quarter, depending on what happens in Europe, that can change the whole picture. So we've got to keep a close eye on the political events in Europe.
Well, that's it. Annatjie, I'd like to get your stock pick for this afternoon.
No, Tanda, I'm going to stick with ABSA, the one that I picked last week, because it's still cheap. The price to book ratio is still close to 1, forward dividend yield of close to 10%, and on a forward price earnings ratio also, of the big four, they are still the cheapest. And I think while the SA Inc. story is playing out, this is just the beginning. I'm very positive on the SA Inc. Companies going forward. So I'm definitely going to stick with ABSA, as the banks still benefit from elevated interest rates. And even if interest rates start to come down, I don't foresee that it will drop by more than 50 basis points this year. So that's still a very favorable scenario for the banks.
Well, always a pleasure chatting to you, Annatjie. Thank you so much for taking through the markets today. That was your midday markets update with Annatjie Van Rooyen from My Wealth Investments.